In other news, Bangladesh has cancelled a $21 million deal with an Indian state-run shipbuilder, marking a fresh low in bilateral relations. Well, the move comes just days after India restricted garment imports from Bangladesh to only two ports, Kolkata and Nhava Sheva. Well, the diplomatic chill is unfolding despite Bangladesh being India's biggest trading partner in the subcontinent in 2024, with bilateral trade totaling nearly $13 billion. Well, India's exports to Bangladesh stood at $11.06 billion, while imports were just $1.8 billion. Tensions escalated further after interim leader Mohammad Yunus hinted at inviting Chinese investment into India's landlocked northeast. Now, following the political transition in August 2024, Bangladesh inherited a distressed economy. Quarterly GDP growth had slumped to just 2%, but rebounded to over 4%. Monthly exports rose to $4 billion, up from $3.4 billion a year ago. Remittances surged to $2.7 billion per month, 54% higher than the previous year. While inflation dropped since December and forex reserves stabilized at around $15 to $16 billion. However, investment sentiment remains weak. Capital goods imports hit a historic low of $812 million per month. Private credit growth also slowed sharply, and power sector fragilities continue to constrain industrial output. Well, despite some signs of recovery, deep-rooted weaknesses persist. Employment and real wages remain depressed, pushing millions closer to poverty. The World Bank now projects Bangladesh's GDP growth at just 3.3%, which is the lowest in 36 years. The downturn may push an additional 3 million people into extreme poverty, raising the total to 9.3% of the population. External risks like the US-China trade war and domestic governance failures further cloud the outlook. Now, without urgent structural reforms and institutional strengthening, 2025 risks becoming yet another missed opportunity for sustainable growth.